And this whole economic singularity thing is no longer a prediction. When I started talking about this about 4 years ago, people thought it sounded kind of extreme. And now it's looking like it's the reality we're facing. I don't think 2032 anymore. I think that's too far away. I think by 2030, the entire economic system has changed.
This may go down as the most important week in crypto history. After 4 months of political gridlock, closed-door negotiations, banking industry pressure, and non-stop fighting over stablecoin regulation, Washington is finally moving. On May 14th, the Senate Banking Committee is scheduled to hold the long-awaited markup session for the Digital Asset Market Clarity Act, better known as the Clarity Act. And for the first time in years, there is growing belief that the United States could finally establish a real regulatory framework for digital assets. The stakes could not be bigger. The House already passed its version of the legislation in 2025, with a surprisingly strong bipartisan vote of 294 to 134, but the Senate stalled for months over one major issue: stablecoin yield. Banks wanted tighter restrictions. The crypto industry pushed back hard. Now, lawmakers appear to have reached a compromise that would allow activity-based user rewards while banning what regulators describe as bank-like passive interest. That breakthrough may have unlocked the path forward. The markup session is now officially scheduled for Thursday morning, and according to industry observers, there is enormous pressure to get this bill moving before the Memorial Day recess on May 21st, or risk delaying meaningful crypto legislation for years. But according to Real Vision CEO Raoul Pal, this is only the beginning. In his latest presentation at SUI Live 2026, Pal argues that crypto is not simply entering another bull market cycle. He believes humanity is approaching what he calls an economic singularity, a moment where artificial intelligence, robotics, energy, and blockchain technology collide to completely transform the global financial system before the end of this decade. If you enjoy deep macro analysis and detailed breakdowns of the biggest economic shifts shaping the future of Bitcoin and digital assets, make sure to like this video, subscribe to the channel, and turn on post notifications so you never miss an update. Let's get into it.
What we're getting to is a whole new phase, a state shift in everything that we understand. And I've called this the economic singularity. You guys might have heard me talk about this before. The economic singularity is that moment when we don't understand anymore how things work because things are now working on digital speed and not biological speed. So the infrastructure we built for the world around us just doesn't stand up. The economics, the politics, the entire system begins not to work anymore because we can't absorb the speed of what's happening. So by 2030, most workers won't be humans. They won't transact most of the volumes. It'll all be agents. Humans will also no longer be the apex intelligence of the planet, which is the most ridiculous change that humanity has ever gone through, and we're about to live through it. It has huge implications. Everybody's talking about it, but it has huge implications for this industry too. Because this whole change towards intelligence escaping the human substrate and going to the silicon substrate at the speed at which it's happening is unprecedented. Generally, most networks and most observable things will work with, let's say, a log regression. That's the network adoption model, Metcalfe's law. What we're seeing observable for the first time at any scale, the first observable time in history is Reed's law, which is Metcalfe's law squared. So we've got double exponentials going everywhere. We've seen it with the output of words written by humanity every year since the Gutenberg press has now been overtaken in the last 3 years by AI. AI now produces more words than all of humans added together. By 2028, they'll produce more words than all of humanity has ever written. And that's how fast it's moving. Every chart is vertical. We've never seen anything like it. You can't even put these on log charts anymore because they're moving so fast. And we're not ready for this. So we just have basically broken how the economy is going to work. This move from carbon to silicon, neurons to chips. So we're not the mind that's running this. The whole world is built around our minds running this thing and how fast we work and how we think. But that's not going to be the main thought process. I'm not saying, and I'll come on to later, doesn't mean humans are kind of taken out of the process, but all of the things that we don't need to do, that it can do more efficiently, remember, units of energy, output of intelligence. If the machine can do it more efficiently, they will do it, and we'll find different things to do. And it's that speed, again, 6 orders of magnitude faster, is not something any system is prepared to deal with. Whether it's the banking system, whether it's politics. Politics can't deal with AI. They couldn't deal with blockchain. They're just not fast enough to deal with how fast this is developing. And it's developing at the fastest rate of any technology we've ever seen. Election cycles are 4 years. How can anybody vote on this stuff? By 4 years, we'll have superintelligence. It's insane. In 4 years' time, the largest workers in the economy are going to be agents, not us. So we're just not set up for this. And it changes kind of how everything around us is. The other amazing thing is people say a simple thing is humans are the most efficient computer ever invented. You know, we use 20 watts of energy to run our brains. Yes and no. Yes, we have this multi-factor model that we run. We've got sense and sight and sound and all of this stuff. But generally at intelligence level, when you actually look at, people say, well, look how expensive AI is. Well, last thing I checked, I'm paying $200 a month for my Claude Pro, or Max, or whatever one it is, and I get PhD level intelligence on every single subject known to humanity. That's cheaper than feeding the human. Yes, they're making a loss. So call it feed a human, right? Think of those terms. That's the energy input for humans. Energy input for humans, let's say on a globalized average basis, maybe you spend $10,000 on food. So $10,000 to get human level compute. That's the energy output of intelligence. What we're talking about here is we're talking about hundreds of billions of dollars to train these things. But one model gives 900 million unique instances. So it's very, very cheap to produce this intelligence. This is why it's scaling so fast, because it's so much more optimal than any human could ever be.
Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. What makes Pal's argument so unsettling is not simply the scale of the technological change he's describing, but the speed of it. He explains that the world's economic infrastructure was designed around human limitations, human labor, human productivity, human decision-making, and human reaction speeds. But according to Pal, that entire framework is now breaking down because artificial intelligence is advancing at a pace no government, bank, or political system can realistically keep up with. He argues that by the end of this decade, AI agents and autonomous systems could handle the majority of global transactional volume, fundamentally reshaping labor markets, productivity, banking, and even the role humans play in the economy itself. And in the next part of the presentation, Pal takes the theory even further. He explains why this shift toward AI, robotics, and exponentially increasing productivity may completely rewrite the rules of economic growth itself. According to him, the old economic model built on population growth and debt expansion is now colliding with something unprecedented. An effectively infinite number of intelligent economic actors powered by AI and robotics. And if that transition accelerates the way he believes it will, crypto and blockchain infrastructure could become the coordination layer for an entirely new digital economy.
And this whole economic singularity thing is no longer a prediction. When I started talking about this about 4 years ago, people thought it sounded kind of extreme. And now it's looking like it's the reality we're facing. I don't think 2032 anymore. I think that's too far away. I think by 2030, the entire economic system has changed. And I'll come into why it changed. And it's down to this, the magic formula. The magic formula is how economies work, how GDP works. And it's basically population growth is the main input, plus how productive those people are. That's generally the intelligence output of the units, which are humans. And then debt growth. Debt growth has papered up the cracks when population growth slows down, and I've shown that that's the everything code that I've spent so long talking to everybody about in the past. So that's the system that it's working, but what's happening is if you apply it to GDP now, everything changes. So what happens is suddenly you change humans, well, not change humans, into the human population of 9 billion people, you add in AI and robots. Again, people haven't got the head around robots. People are thinking of C3PO being a nice little robot that makes a cup of coffee for you or whatever, or helps you. We're going to put AGI brains into humanoid robots that are more dexterous, faster, stronger, fitter than us, with smarter brains. That, to me, is a new species. That's where we're going here. And they're going to come into the workforce very soon. We've seen the production lines ramping up already, so it's coming. And we're going to put these super brains into them, and we're going to compete with them in jobs? No, we're going to acquiesce to those jobs because we don't want to do them. We'll find other stuff to do, which I'll come on to the sec. So what happens is you start to get weird outcomes because you're going to suddenly go from a restricted population of 9 billion people to an infinite population of economic actors. So we will start to see GDP growth doing crazy shit. 1 minute it's 10%, next minute it's 30%, depending how fast it scales, how far up Reed's law we go. The robots are not Reed's law because they're very difficult to manufacture, but the AI is infinitely fast and getting faster. So we're going to see that. Then also, we're seeing the energy density compute efficiency formula, which is the universal code law number 1, operating at scale, because what we're seeing is the collapse of the cost of creating energy. Now, whether that's solar, which we're seeing at scale, we're now going to space with solar at scale. We're seeing renewables at scale. Most people don't realize China added more solar power last year than the entire world's standing stock of solar, because they realized how efficiently cheap it is to produce. And we had the breakthroughs in shale, but it's not fossil fuels. Fossil fuels is the backdrop to this, but really the Wright's law efficiencies of cost plummeting are coming from the renewable side, and it will come from nuclear as well. And then we're seeing compute costs collapsing as well. We're seeing the per token cost of energy coming down as well. So we're seeing a double exponential of Wright's law happening both at the same time, both in the output of productivity and the input in energy costs. So what does that do? Drives the flywheel even faster, which is scary thinking how fast it is now. We ain't seen nothing yet. It's only going to get faster and faster and faster. And the last part of this equation was debt. This is the world we've been living in. That's the everything code. Debase the currency. Debase the currency by 8% a year so you can manage the debt growth. But over time, debt as a percentage of GDP will go. It'll be close to zero. And the reason being is because GDP is going to go up so fast. And this is what even the US administration has been talking about, is about once you start driving up productivity growth via AI and you start bringing in robots and AI into the workforce, you basically erode the debt away to nothing as a percentage of GDP. And that's the plan, because you can't get rid of the debt any other way.
Powell's short-term prediction for the market is just as optimistic as his broader everything code thesis. In a recent post on X, he wrote, "There is a rising probability that we have a supercycle based on increasing interest payments that need monetizing via the banking system. The reliance on short-term bill issuance reducing cyclicality of debt rollover, the largest capex boom in history based on the most important tech ever, a potential explosion in bank credit to finance the capex, and a global race between China and the US that can't be stopped." He continued by warning that the only major factor capable of slowing this process would be if productivity-driven disinflation fails to offset inflation in goods and energy. Powell compared the current setup to the 1990s technology boom, but on a far larger scale. And according to his universal code framework, nearly all available global capital will eventually flow toward technologies that increase the output of intelligence per unit of energy while simultaneously lowering electricity costs. In other words, capital will aggressively concentrate around AI infrastructure, energy systems, robotics, semiconductors, blockchain coordination layers, and the financial rails needed to support this transition. That is why Powell believes crypto is positioned at the center of what may become the largest technological expansion cycle humanity has ever experienced. If AI agents eventually dominate economic activity, they will require systems capable of operating globally, instantly, autonomously, and without the friction of traditional financial infrastructure. That is where blockchain networks, stablecoins, tokenized assets, and high-speed settlement systems begin to matter on a completely different level. In Pal's view, crypto is no longer just a speculative asset class. It is becoming foundational infrastructure for the next economic era. And when you combine that thesis with everything happening politically this week surrounding the Clarity Act, the implications become enormous. Washington is racing to build regulatory frameworks at the exact same moment. AI, robotics, and digital assets are accelerating faster than almost anyone expected. Institutional capital is already positioning itself. Governments are scrambling to keep up. Major banks are preparing for tokenization. Stablecoin legislation is moving closer to reality. And according to Pal, this may only be the very beginning of the transition phase into what he calls the economic singularity. Whether you agree with every part of his thesis or not, one thing is becoming increasingly difficult to ignore. The pace of change is accelerating everywhere at once. AI adoption, energy breakthroughs, institutional crypto adoption, tokenization, sovereign competition between the United States and China, and the global push toward digital financial infrastructure are all converging into a single macro trend. And if Pal is right, the next few years may look nothing like the world investors have grown used to over the past several decades. If you enjoyed this breakdown, make sure to like the video, subscribe to the channel, and turn on post notifications so you never miss our future uploads. Thanks for watching, and be sure to check out our other videos for more deep macro and crypto analysis.